You're listening to the Plugged In Podcast, presented ad-free by Cornerstone Advisors. Coming up, Steve Williams and me, Al Dominic, are not only talking about the business of banking, we're going to dive into some of the hotter topics in the fintech world. And so we're thinking like AI playbooks to, creating that culture of creativity, all to help industry executives just get a little bit smarter, a little bit faster. So over the next 20 minutes or so, we'll do what we do by basing our comments on some musicians and lyrics that you may be familiar with. This time, we're pulling out some Drake, some Kendrick Lamar, some Dua Lipa, and some Haim. So I have to say, I'm sorry to all those classic rock aficionados because we're kicking it with the welcome.
You're killing the classic rockers on this one, Al. I tell you.
But hey, we're going to keep it classy, of course. I mean, some of
Always
these lyrics
classy.
are not for the faint of heart, but that's pretty much the business of banking, right? So, Steve, before we get into some of the fintech fun, I did want to talk with you about where we are as an industry, given that we've both been kind of crisscrossing the country, being at different events, speaking on behalf of, a great industry. And in some ways, it feels like we started the year with all this incredible optimism. In some ways, I want to pretend like I'm a Kansas City Chiefs fan before the Super Bowl. They're riding high on the excitement and potential of their team. And then all of a sudden, they get smacked in the face by the Eagles.
Right.
And so they had to adjust, and they didn't really pick themselves up. So no offense to those Kansas City Chiefs fans out there, but the Eagles really laid the smack down.
Yeah. Then this guy named Jalen plays basically a perfect game, and
perfect game. But but doesn't it feel in some ways like bankers entered the year kind of riding high, chests out, a lot of optimism, and then all of a sudden you just get hit with something unexpected.
Well, yeah, and our chief research officer, Ron Shevlin, talked about this new wave of optimism in our What's Going On survey of 300 executives feeling really optimistic going into 25. But it is like that first quarter where you get hit and somebody drops a pass and you get a penalty and you're going, what's going on here? Al, I'm looking at, here we are today, by the way, we're recording on St. Patrick's Day. So it's a lot of green, the Eagles, and my stepdaughter Sienna's birthday. So happy birthday, Sienna. But year to date, if we look at bank stocks, down about 6%. So they were riding high, with a big recovery going into the end of 24. But like most of the market right now, uncertainty, the yield curve is kind of showing, are we really becoming fiscally responsible with Doge, and that's why rates are going down? Or are we just headed for a good old recession, and that's why rates are going down? So that uncertainty, I think, has cast kind of that feeling of that first quarter where you're certainly not ahead by 2 touchdowns.
Yeah, and uncertainty is the name of the game here in Washington, D.C., where I live. So much is happening. I feel like this is a great opportunity for us to not just look behind us, but also to look ahead. But if we are going to take a pause and remember where we're coming from, essentially 2 years ago was when we saw a single tweet essentially take down a $200 billion bank in less than 48 hours. Right. So to your point, it wasn't the Doge folks at work. It wasn't, bad loans. It was really just the pace of fear and uncertainty that spread across the internet. And so, we're talking obviously about Silicon Valley Bank, great, company that financed really a lot of the entrepreneurs in this country. But what we saw was that banks don't fail slowly. They fail, basically as quickly as SVB did. And so we know that a lot of banks today are still running on some of the legacy infrastructure that SVB was using. You don't have to look hard on LinkedIn to find the naysayers who say some of our leading financial institutions weren't built for how businesses operate today. So, I thought this would be an interesting opportunity for us to get into one of the 3 topics that we want to cover. And to do this, I'm going to use Drake as our inspiration. So
Al,
I know,
Steve, I've actually
seen
seen Drake live. That's how hip I am.
You're very cool. I want all the listeners to know he's holding
I was
it down
dragged
for
to
us.
Drake. I wouldn't say it was I wouldn't say a top Springsteen, but it was a fun show.
You've been listening to Nokia on repeat, I bet. But I guess because we want to keep it a somewhat cleaner version, we should use his headlines as inspiration, since AI is always in the headlines these days. And really, we've been gauging a lot of interest in AI playbooks for financial institutions, both, why you should do it and why you shouldn't. And I think this is really a crucial topic at the moment as more and more FIs are looking to implement AI, but are unsure of where to start. So, Steve, maybe we could talk a little bit about that starting point for a AI playbook.
Yeah, I think a lot of the debate has been basically, I'll bottom line it. Everybody out there that we talk to is kind of in the same spot. They've had both an opportunistic toe in the water and a healthy fear of AI. So the first, say, 18 months out of the chute has been some pretty tepid things. It's been, we're testing Copilot for our employees. We're starting to build a knowledge base that uses AI for procedures. We do have some vendors and tools we're using, we'll get to in the contact center. But at the end of the day, it's this debate between, is this the end of the world and huge, or has this been overblown? And you've seen articles in both places. Now, I follow someone on X that I love, Al, called I Rule the World. I don't even know who he is, but can I give you this quote? Because he's looking right now at what's happening with things like DeepSeek and OpenAI and Grok. And he says, frankly, society isn't even close to ready for the intelligence boom. We're cruising toward a profound disruption of the knowledge economy, one that not will only redefine jobs, but the very meaning of expertise and human purpose. Like, you hear that. And when he plays stuff like an agent doing 50 tasks at once in a coordinated fashion, if you've seen those videos on X, you kind of go, holy cow, we're in for it. At the same time, you and I and some colleagues were tweeting this or texting this weekend on a great article in the Wall Street Journal, a guy named Joe Papard from Ireland, who talks about basically that companies should not have an AI strategy. And his point was, and I'll quote, even if a well-crafted AI strategy were to somehow magically land in a CEO's inbox, the organization won't be able to implement it. Most have just haven't done the foundational work. And I think that's one thing, Al, that we're seeing in banking. Like, yes, we can dip our toes in the water. And I think, yes, we should consider this extremely serious, like our research director, Ron Shevlin, says. But it comes down to the foundational work because it's hard and it takes time. And we frankly keep kicking that can down the road. So it came out in our executive survey that data is still not something executives are proud of in our industry. This whole operating model of the future depends on data.
Well, and I don't know who the author of that X account is. I feel like Ron Shevlin would love to take credit for it because it is a pretty interesting follow. And when you see like 50 social media sites being run in parallel, that's a pretty amazing and scary thing to see firsthand.
Right. And we're actually, to me also, OpenAI saying we will give you agents for $5,000 to $20,000 a month that will basically replace human knowledge work. And they're saying this is coming not in the future. This is coming this year, that corporations can sign up to get basically agentic help. Now, we'll see how hyped that was, but it still shows something moving very, very quickly. We wouldn't have predicted this 2 years ago when Silicon Valley Bank was having a tweet attack.
Well, and I remember when we had Sarah Hinkfist from Bain Capital Ventures on, and she was talking about the hype, the hope, and what's happening. I think that's still a mental framework that we can, put our arms around as executives. I also think this is one of those moments where if you're sitting in a leadership position, you really have to take into account that whole run and protect the business while you're trying to grow and change it. Because the author that you're referring to in the Wall Street Journal lays out a really smart case as to why you may not want to put a plan together. On the flip side, I've been lucky to be with various CEOs who are taking pencil to paper and writing their own strategy and saying, we're not going to delegate this to others. And we can't afford to wait for something to impact our organization. So I think there's entrepreneurial spirits that look at this moment of fear and concern and get excited about it. Others are going to pull back. But I think from a playbook standpoint, this is why it's so important that early on you can talk about ideation and data preparation, model development, testing, deployment, monitoring, and what you expect out of folks, so that the governance piece, the ethical considerations, as AI becomes more and more embedded into your like financial day of life, you have those frameworks already developed and you can add to them, but you're ensuring fairness, accountability, and transparency. And I think those are words that everyone in the banking space can get behind.
Yeah, and I think view it as just this is an intervention moment like digital was in 1999, but or mobile was in 2008. But I think what's important is this is all about applying technology to the business. And
Yep.
one thing I would do this year, when executives ask me, what should I be working on with AI? I say pragmatically, Al, go into the executive suites to all your direct reports and ask one simple question. Can you walk me through how we categorize and index data at this bank, and then what we use that categorized and indexed data for? Because everybody likes to talk about, we've spun up a data lake and a data warehouse, and now we've moved it to Azure. Go back to
Mhm.
what is the secret sauce of data, is how it's been categorized and indexed so that models can use it, so we can put things on top of that. And I think where we really get an F in the industry is categorization and indexing, because it's hard work. And it's like walking out into a pasture in Ireland, since it's St. Patrick's Day, to a bunch of sheep and asking them how they categorize and index. How do you get everybody in the organization around that common vision? And that's what it's going to take. And that, if you did 10 months of that kind of work this year, that would be very valuable.
Yeah. And I think, we also have to be fair. We have to, own it ourselves. So,
Right.
Steve and I are lucky, when I think of Cornerstone and where we are as a tech advisory firm, to be able to dig into opportunities that are customer, focused, operations specific, and trying to figure out immediate opportunities.
Mm-hmm.
It has to be roll up the sleeves, really educate yourself. You can't substitute critical thinking for how this is all going to roll out. You and I have talked about pricing and product design, and how some of the AI tools that are around enables maybe a more dynamic, data-driven pricing, model. We
Right.
talk about being hyper targeted, really personalized, as a smarter bank. I think there's opportunities here to, evaluate variables that you may not normally think you can look at: cash flow, industry trends, and how do you optimize loan rates, fees, are there products that you're offering, treasury services, SBA loans, that your commercial clients are going to look at and say, okay, you're giving me more real time, information than I realized was there.
Right.
Simulation, scenario planning. I mean, there's ways that, banks can start to incorporate some of this into their behavior without exposing customer data, without becoming too far from what makes them a trusted, resource to their community.
Yeah, I think one thing that I would also encourage, in addition to indexing and categorization, is there is no harm in doing rapid discovery and learning from all the smart people out in the fintech ecosystem who are trying to do things like you said, Al. So in fraud, people like Feedzai or Darktrace, and in cybersecurity, in lending, Zest Finance is an example. Blend is even applying it into the mortgage POS process. I
Yep.
think you mentioned Numerated as an example, recently acquired by Moody's, which has this dream of the AI driven credit memo. So there's a lot, I think, to be engaging those fintech folks, because they're trying to figure out the use cases. I just think it's kind of best to characterize it as a time of rapid discovery, but not
Yep.
necessarily we know exactly the design and how we should execute. But we should be kind of getting our fingernails dirty with smart people right now.
Well, and this is where you find who you're working with that really has that curiosity, to their
Mm-hmm.
day-to-day behaviors, because there's just so much that you can go and see. One thought I'll leave you with, Steve, is I've got to be in front of a few different bank boards, and I know they're going to be thinking, if I have a roadmap, if I have a playbook, at some point I want to achieve some type of efficiency gains or ROA improvement over a fixed period of time. So, I'm starting to think about how can they allocate a certain amount of money for that, quote, data unification, which
Mm-hmm.
is a topic that has come up at conferences like Acquire, Be Acquired. When I was, listening to those folks who are at the GAC event here in DC, how do you target some efficiency gains by really getting your arms around the data like you've just described? So interesting times, right? And it also ties into, a second big theme that I think we both realized over the last 90 days. It's really about the importance of personalization
Mm-hmm.
with tailored financial services. And so here, I think we put a little Kendrick Lamar spin on things. We start with Drake, we move over to Kendrick Lamar. Kendrick has been a creative and commercial like superstar that few outside of Taylor Swift has been able to match. So even if you're not a big Kendrick fan, you have to give the guy some credit.
The
Well, his
the
Super Bowl like
the
halftime
reels
was a
and the
little
memes
bit
are on
different.
fire with Kendrick. That's been the fun
They're a
part
little
since
different
the
than we
Super
would
Bowl.
might like, but he's got a song Luther that opens with a lyric that says, "If this world was mine," and he continues, "If it was up to me." And so, I kind of like that spirit when we think about really personalizing, being hyper focused on our customers. Are you seeing people who are doing this well right now?
I think it's early stages again. I think if you were to look at the marketing funnel of a bank and say, how well are we at the wide end of the funnel, really using social media, digital to build that awareness? How friction free have we made that into looking at solutions and products that are personalized, like you said, using data? And then how do we make that friction free origination, bring them in, and then engage them with more data? I'd say we have a ton of work to do, but I see a lot of folks doing interesting things. One thing I'm seeing is that real focus we talked about before on product management and product experiences, something that
Mm-hmm.
Ron Shevlin says the fintechs do better than banking. And they don't just mean checking product or consumer loan product. They mean, what's that overall experience? What does that app provide in terms of features? How do I keep rolling out new improvements? I'm seeing folks start to organize that way around product as well. And then I am seeing some very gritty mid-sized financial institutions start to apply data better through that marketing funnel. And you see vendors out there, Al, like I know Personetics, who you and I know the principles of. They've worked very hard over the years. I think maybe in the early years they were ignored, kind of like, hey, that's cute, but we're a commercial bank. But with funding and everything, you're seeing folks like that. In the service world, you've got folks like Casisto, Nuance, Posh, who are bringing more of that personalized experience and using AI. So I think you're going to see that really explode over the next few years, but it's going to take some mistakes and testing and learning how we do that. And I
Yeah.
think that another thing I'd bring up is this is a really interesting one. Does this environment favor the large or does it favor the small? Because it's a very disruptive environment. And if I were a regional community bank, credit union, I'd be trying to act and think like a disruptor and use these tools, more effectively out there. I mentioned to you, I read an interview with Therese Heitzen, rather, from JP Morgan, talking about what is, a $4 trillion bank doing with AI. And it was the same stuff. It was large language model for employees, a bit of AI in the call center, and working on models and integration for the future. But they're no
Yeah.
further ahead, in my opinion, than the average, entrepreneurial shop, and maybe behind some of the fintech. So it's time to think like a disruptor if you're a regional or community bank.
Well, and you can get inspiration from a lot of places. I posted something about Andy Grove's "Only the Paranoid Survives." That book has been in circulation for quite some time. But when you
Mm.
think about that message that Intel had, that he had when he was the CEO of Intel, that he had to essentially walk himself to the elevator, quote, fire himself, walk around the building, and come back up, rehire himself, but have a fresh perspective on how the business might run. I think that's where we all have opportunities to say, just because we've done it a certain way doesn't mean we have to continue in the future. No matter how regulated we want to say, the privacy, the data expectations, we still have opportunities. And I love your point about size. Size never, in my mind, equates to ambition. So you can be a really entrepreneurial business. We've recently had Malcolm Holland from Veritech talk about how he grew that, Texas, bank from really just an idea to what, 14.5 billion in size right now. We've had other folks, Dave Brager from Citizens out in California, that's a $15.5 billion bank. But again, a mindset of let's be creative, let's be disciplined, but let's also perform and do something really, really well. So, being personal, being efficient, being hyper focused. I don't think it has to be just the JP Morgans of the world that can invest in that idea. So, okay. So Steve, let's flip to our third artist. And I hope that you've listened to a little Dua Lipa and
Yeah.
probably have done a little dancing with your wife, Catherine, on If These Walls Could Talk, because I know my wife, Amy, and I happen to enjoy that on a Saturday night if we're out and about. So, I think about how we balance being responsible, stewards of capital with also, trying to drive change and creativity. It's like walking a tightrope. And, you and I have had conversations with some folks about that culture of creativity and productivity is possible, but you almost have to put on a hat like a PE firm is kind of sitting in the shadows saying like, but we still want to see outcomes. Like how do you start to balance this idea that you've got to be a responsible steward of capital with being a creative, idealistic individual?
Yeah, I think one thing is, to me, I would take a step back and look at the power dynamic of a traditional bank. And very candidly, in a commercial bank, it is the finance group who runs the numbers and does deals. on M&A and the credit group who does all the big loans and drives the big relationships. And so that power dynamic has kind of been who's in charge, who gets resources, how we look at the business model. And I think it's tended to disempower IT, talent management, marketing, operations. I think if I was going to really start changing things, I would look at some of my rock stars in those transformational areas, potentially give them the resource to run the bank while I charge them with transforming the bank. And I think they've got some of the grit. You may bring in some transformational talent in data, in digital, in integration, but get this kind of group together who knows how to roll up their sleeves and start testing things. And whenever I see a great, fast moving community bank or credit union, they've got this group, this kind of coalition of the willing. And typically the executives empower them more than just say, just run the bank and we'll see what we can do about that extra credit stuff. I see people have come to Cornerstone out of frustration that they had a vision for transformation and just couldn't get the budget, just couldn't get the attention of the powers that be. So if I were CEO, I would check myself. Am I still giving too much power to the old model? And how do I kind of bring that in going forward? And it can be, doesn't have to be Deloitte. It can be letting your middle managers have some resources to run the bank while they start to do that rapid discovery.
Yeah, no, that's awesome. And, again, we're in an industry where, there's some things that historically have been the norm. I think you've identified them. To wrap things up, one of the norms of the business of banking has been the M&A cycle that we typically see. I know when we started the year, we thought it was going to be pretty robust. I still think we're going to find a lot of deals, but I just jotted down from the first quarter some that we made note of, because Moody's acquisition of Numerated was pretty compelling. It expands their lending technology solutions. I know Sam Kilmer, who runs our fintech practice, talked about how it creates an end-to-end loan origination and monitoring solution.
Something Moody's has struggled with for literally 20 years. So let's hope that, that gives some more oomph to it.
Yep. So check out what Sam has to write. He wrote a nice Gonzo Banker about that. He also did one for Alchemy's acquisition of Mantle, which was a $400 million deal, as I think I wrote it down, which enhances their digital account opening capabilities. So, in the digital banking space, some notable deals happening there. You come over to the traditional side of banking. I thought Cadence acquisition of FCB Financial in early January was interesting. It had a high deal value to tangible common equity ratio, which made it the second most expensive deal since the start of 2024. One that woke me up in the early morning was when Cornerstone Community Bancorp was acquired by Plumas, but of course it comes across as Cornerstone's acquired, and I was like, what the heck have I missed? But that was a deal announced in January, late January, for about $62 million. We also saw around the same time FrontWave Credit Union acquire a bank, Community Valley Bank, which was the first credit union bank deal of 2025. So I thought that was worth pointing out, because we've seen some of that activity.
Those are continuing. It's a buyer's market because there's a backlog of sellers. Sellers don't necessarily have the best pricing expectations given all the sellers right now, and that's what's holding it back somewhat. But I do think credit unions doing cash purchases has been attractive to some community banks, and I think it'll continue.
Yeah. I mean, there's some, and then there's just like the regular deals. Seacoast Bank down in Florida, they acquired Heartland for about $110 million. This was Seacoast's fifth largest M&A deal among its 16 bank purchases since 2014, so that was notable. And then Old Second's acquisition of Bancorp Financial for about $197 million, which was towards the end of February. That was the third largest U.S. bank deal announced up until this point. So, there is some stuff happening, but you and I still remain cautiously optimistic that on the M&A front, we're going to see some activity. You want to just wrap us with that?
Oh, there's this feeling that, Trump and our new Treasury Secretary essentially are okay that let's kind of put the economy into a recession to lower long-term rates, which will help a lot of things, including federal debt service and asset values, et cetera. So there's kind of this feeling that there might be a very rough beginning that could turn out into a growth agenda at the end. I think I do think there's a boom in M&A at the end of the year or the second half of the year, because time keeps passing on those bond losses that make the math persnickety. And the 10-year is down quite a bit from when it popped up in the fall of 24. So I think if you just look at that, and then again, it's when everybody looks at Zillow and has their house on the market at the same time, they all start with a value that they think they should get, and then they start to get to reality. So I think sellers coming more to reality, bond math getting easier, and just the dynamic that we need consolidation. And we've got a huge amount of banks that want to sell. You're going to see that activity happen soon.
Yeah, and I think there's a lot of really strong banks that aren't going to drop a napkin on somebody's table with a number, but are getting solicited by some pretty strong organizations that see a brighter future if they were to tie up with some of these higher performers that are out there. So
yeah,
that'll be our prediction as we hit the second quarter of this year. Is M&A deals, we're going to see them.
Yeah, last thing I would bring, what's kept commercial bankers busy the last few weeks, it's thinking into their portfolio about how tariff wars could impact supply chains and underwriting of all these businesses that are global businesses now, whether they're in Iowa or Idaho or Florida, these are global businesses. So I hope that settles down, because that makes it really hard. These tariff deals are changing by the hour, and everybody's trying to underwrite businesses who operate, at least from a supply chain standpoint, globally.
Well, the business of banking is never boring, as I hope you've picked up in this great conversation with Steve Williams. On behalf of the entire Cornerstone team, I'm Al Dom. I just want to say thanks for getting plugged in with us today.
Thanks, Al.